Friends, let's continue with what financial management. Yesterday we had, in the last lecture we had discussed about what's financial management, and we had studied, in fact, we had observed what's financial management from three perspectives. Number one perspective from which we had studied earlier was in its sense of area, scope, and the third factor which you might come across when you see the last lecture. Today we are again trying to continue with what exactly is financial management. So to speak, it can also be called as, like we had talked about, it is also called as corporate finance. Now, why corporate finance? That we'll understand, or try to understand later. But for now, let us understand what exactly is financial management. We are trying to continue with what our understanding about financial management. Now, the reason why we are trying to focus more on financial management is only because once we understand the perspective of financial management as far as management education is concerned, the phobia or the fear of understanding financial management is taken care of. So we are trying to have more emphasis on what exactly is financial management. To understand that, we need to understand economy as such, right? From the perspective, what's economy? Now, economy being macro environment, it works under macro environment. Like here we are talking about what exactly is macro environment. If you see that very carefully, macro environment consists of economic environment, taxes, political climate, etc. Now, what do you mean by economic environment? When you say economic environment, more emphasis is on what exactly is the economic environment. Economic environment comprises of the GDP, agriculture, industries, so on and so forth. How they are working, what is their contribution like to the economy as such, what's the demand and supply of these various sectors that contribute to the economy. Now further, when you go ahead, if you see, we are also talking about taxes, right? Taxes, by this we mean what is the tax culture of a particular country. Now, why tax culture is being studied in macro environment, or what has it got to do with financial management, is only because the tax perspective of any given country indirectly affects financial management. Hence, that's the area of why we are trying to understand. Political climate, of course, if you are very well aware of, politics or political climate is the backbone of any given economy. Backbone. So to speak, in any given country, if the political climate is stable, right, the economy is moving. Economy keeps on moving. It keeps on growing. And if the economy is in the growth mode, that signifies that there is going to be development. Now, this growth or stability factor, if you see, this is also directly linked with stable financial management. It affects positively financial management of any given firm. That's the reason why we are studying this. Now, moving further, we'll talk about the scope of financial management. Generally, we always deal with financial management with respect to firm. Here we are talking about firm. Now, economy being macro environment, firm is initially a component of macro environment, hence it's termed as micro environment. Now, what comprises of micro environment? These two factors, managerial economics and financial management. Now, what comprises of managerial economics? Managerial economics comprises of decision making. Of course, in both these cases, or for that matter, in management education, why we undertake management education is only with the simple reason that we normally take decisions, right? Involves decision making. So, decision making with respect to what? With respect to economics and financial management. Now, what does the decision making as far as managerial economics is concerned? It leads to optimum utilization. Optimum, not the key word here is optimum. Optimum utilization of available resources, not those resources which are not there, available resources, and we are trying to have optimum utilization. Now, when we use the word optimum, it's always in the sense that whenever you say, as far as economics or finance for that matter is concerned, if you say if you say optimization, right? If you say optimization in terms of finance, right? In terms of finance, when you talk about in finance perspective, that generally is with respect to keeping the costs minimization or risk minimization for that matter, not cost, right? Risk minimization, and we talk about return maximization. So, when we have this equation of that sort, when we have this equation as far as finance is concerned, we say that we are talking about optimization as a concept. So, as far as managerial economics is concerned, it involves decision making which is leading to optimum utilization of available resources. Now, in that sense, what does financial management mean? It involves decision making. It involves decision making with respect to profit maximization and wealth maximization. These are generally the two goals around which the whole theory of financial management rests. two important factors that are taken into consideration: profit maximization and wealth maximization. Now, when we are talking about profit maximization, this is for the people who are the owners. Generally, owners are, they will always be owners and employees. These are the two people who are concerned with profit maximization. Wealth maximization, or this is a concern of investors. Investors can be from public, investors can be institutions, investors can be what you can call financial institutions. So this is the perspective of these two people: profit maximization being the perspective of owners and employees, and wealth maximization being the perspective of investors per se. These two can be the goals of financial management. What is being tried to make you understand is what exactly is financial management. It involves a decision making which is leading to profit maximization and wealth maximization, which incidentally can be, these two can be incidentally be the goals of financial management. Now, these can be achieved, right? Can be achieved by risk minimization, return maximization, and capital optimization. Now, when you say the goals of financial management can be achieved by what? Risk minimization. Now, how is this possible? As far as finance is concerned, how can you minimize risks? When you keep the costs of running the business minimum, then the risks are minimized. Now, the costs can be operational as well as investment costs. Now, operational costs, they are studied from accounting perspective, and investment costs, they are studied from finance perspective. Now, why I am giving you this differentiation is, again, as far as sometimes we talk about what is cost in terms of economics and what is cost in terms of finance, is only because the terminology might appear similar as far as economics and finance, or for that matter accounting, is concerned, but the interpretation in all the three areas is different. So when you are saying that if you want to minimize risk in business, so for that you can do is, what you can do is, you can keep the operational costs down. So when you're talking about operational costs being down, that means you're talking it from the accounting perspective. And when I say that if I want to start a business, I need some capital, I would employ that capital which is cheap, or where I can get the capital at less cost. That perspective is studied in financial management. So here, risk minimization means what? The costs of capital, if they are kept on the lower side, the risks are minimized. Now, and at the same time, if you're talking about return maximization, how is it possible? What is the perspective that you talk in terms of financial management, or what is the angle, or what is the concept, or what is the theory of return maximization as far as finance is concerned or financial management is concerned, is that whatever capital you have employed, whatever capital that is employed, the cost has to be low so that this lower cost contributes to returns, right? Contributes to returns. Now, how do you achieve this risk minimization, return maximization? Is by capital optimization. Whatever capital sources you have selected to be employed in the organization, their utilization has to be optimum. Their utilization has supposed to be optimum, right? Now, these goals, now why we are doing all this risk minimization, returns maximization or capital optimization is only because so that these two goals they are achieved, right? That is profit maximization and wealth maximization. Now, what is risk minimization? If you get answers to this, what is returns maximization? Why? What is capital optimization? How? These are the questions that are answered in financial management. That's all. This is what is included in financial management. You're always talking about in financial management minimization of risks, maximization of returns, and optimization of, and both these things, risk minimization and return maximization, can be achieved by capital optimization, right? So these are the three perspectives that are studied in financial management. Now, in short, what is financial management exactly? It deals with financing. Financing is from where you are going to raise capital, or how you are going to raise capital, right? It also deals with capital structure. Now, when you say capital structure means what? A firm is run on the basis of the capital that is employed. Now, capital can be in the form of what? Equity, debentures, bonds, and loans. These are the, what you call it as, structure of the capital. Like if I talk about what is the structure of human beings, is that you can say that blood, muscles, veins, capillaries, skin, sensory organs, right? Glands. These are what? These are structure. This comprises of the whole body. So when you say that capital, when you use the word capital, capital may be in the form of equity, capital may be in the form of debentures, bonds, or loans. It can be of any form. So, composition of capital structure is what is studied in financial management. And also, financial management talks about business activity. Now, business activity generally is not what is meant by the production of goods and services, or consumption of goods and services, or distribution of goods and services. Those three activities, production, distribution, and consumption, are economic activities. Now, what is business activity? Now, why we are doing business is only for these two motives, that is profit maximization and wealth maximization. Any activity that revolves around these two aspects is what we call it as business activity. So, financial management deals with those activities that are related to profit enhancement and wealth maximization, right? It also includes maximize returns and increase the shareholder value. This is exactly what we maximize returns, profit maximization, shareholder value maximization, wealth maximization. Shareholder value maximization is what we call it as wealth maximization, and these two aspects, they are included in financial management. Now, you might be under the impression that is financial management study difficult? The answer definitely is no. Now, why no? Is because whatever you do in life, that all revolves around financial management. So, whether you like it or not, this aspect from our lives, or for that matter from any business, cannot be wished away. You cannot simply wish it away so that your problems are less. No, you got to study. There's no other option for that. So how to do that, like I keep on telling you all the time, is by having a vocabulary of words that are related with finance. Now, if you see very closely here, right, if you see in the whole lecture, we have been talking about what risk, return, predominantly what we are talking about. Predominantly we are talking about these two aspects, right? These two aspects, what are they? Risk and return. Now try to understand what exactly is risk and what exactly is return. Like we had discussed in the last previous lectures, risk are variations from the actual results. Returns are the results of the efforts. Now, these variations and results, they are when quantified, or when we talk results, when we talk about risk and return, when these are quantified, it is called as finance. It's so simple. So, risk and return, when talked in terms of numbers, when they are quantified, how much is the risk, how much is the return, right? Then it is called as finance. I hope this makes a lot of sense and clarity in understanding what's finance. That's all for now. Thank you.